So one may ask, is bookkeeping accounting? It is not. Bookkeeping by itself does not present a clear financial picture of the state of affairs of a business. When one has to make a judgment regarding the financial position of the firm, the information contained in these books of account has to be analyzed and interpreted. This is the purpose of accounting. With accounting, you can 1. Calculate how much your operation costs and where you can reduce. 2. Ascertain your financial position, as in how much debt you have, how much money you need to receive, and how much equity you have. 3. Communicate this information to users. So, bookkeeping is an input through which you can create meaningful reports using accounting. Some of the key reports prepared through accounting are 1. Profit and loss statement. This shows the profit or loss the business is making. 2. The balance sheet. This shows the assets and liabilities of the business. 3. Cash flow statement. This shows the cash and liquid assets of the business. So if you look at accounting holistically, the input to the accounting process is business transactions and the output is the meaningful reports. And the process of accounting involves the following stages. 1. Identifying the business transactions from the source documents. 2. Recording all business transactions in the journal or subsidiary books. 3. Classifying the recorded business transactions so as to group the transactions of similar types in ledger accounts to prepare the trial balance. 4. Summarizing the classified information from the trial balance to prepare profit and loss statement and balance sheet. 5. Analyzing the relationship between the profit and loss statement and the balance sheet so as to identify the financial strength and weakness of the business. 6. Interpreting the meaning and significance of the relationship from the above analysis. 7. Communicating the results obtained from the interpretation to all the interested parties. Accounting cycle is the complete sequence of accounting process that begins with the recording of business transactions and ends with the preparation of final accounts. So, for my stationery shop, I start recording the day-to-day transactions in the journal. From the journal, at regular frequency, I move the transactions to the ledger under the respective accounts, where I apply the debit and credit principles. And from the ledger, when the financial statements are to be prepared, I transfer these balances to the trial balance from which the trading and profit and loss account is prepared. The profit and loss that is prepared gives the net result of the business, whereas balance sheet that is prepared from this data gives the financial position of the business.